Doing a quick sound test. Let me know if you're hearing me all right, folks. Awesome. Yeah, we'll just watch the counter. We'll get going here in just a few minutes. Just got a couple more prep things to do. Welcome, everyone. Looking forward to today. We get to hear Mr. Powell talk. So I got just a couple things to set up, and I'll be right with you. Hey, folks, I'm going to put the live screen up for just a minute. We'll be getting started here in just about 2 minutes. Thanks for showing up. All right, folks, welcome. We're going to get going here and see if we can figure out what's going to happen the rest of the day. So I'll come on screen. Some funny chatter going on the channel. Anyway, a lot going on actually. We've got the Fed coming out here in a few minutes. I'm going to attempt to put in all of the. I'm going to bring up live on TV, and we'll try to watch the announcement when it happens. And anyway, I just realized something. I'm going to put you folks on pause 1 second. I am in Arizona. I forgot to turn the air down in the office when I got here. So hang on 1 second. I'll be right back. All right, we are back. I am back anyway. So yeah, a lot's going on here. Futures just went negative on the session. I don't think the Fed has much, but one of the things that we've seen this morning as things are unfolding and the day's getting going is that a lot of chatter all of a sudden about the stimulus. I was just looking at let me put this up. You can see, well, this is just my YouTube TV, which will watch the Powell come up. But just a minute ago, Pelosi was on TV. She's talking. All of a sudden, everybody's talking. And I keep telling you, the only way that this stuff works, the Fed stimulus is going to support the capital market. The Fed... but we need the fiscal stimulus to be able to get the economy going. And I mentioned also in last night's commentary, I didn't realize it, but I saw this stat yesterday, but half of the people that are on unemployment are in the state of California. So there's roughly 7 million people. So California is still, for the most part, closed. And if they open it up, all of a sudden things look a lot better, and the continuing claims drops to 7, 8, 6, depending on how fast things were to come back online. So there's still some backdrop of fundamentals, and I know I get told all the time that fundamentals don't matter, but they do. And as and there's awful lot of rhetoric out there, as you all know, is just how, around both sides of the V bottom. Is it going to happen? Isn't it going to happen? All of those things are absolutely out there, right? It's America. It's the planet. Everything's polarized, and that's just how it's actually been like that for a long time. A lot of folks like to say it's been, polarized. This is something new in the last 5 or 6 years. It's not. I mean, presidential elections have been 51 to 49 for as long as I can remember, and I've been around for a few days. So anyway, but as far as the Fed goes today, I don't really have any big expectations for them to come up with anything. The problem, and last night's video that I put out there, is that, it's going to be very easy, I think, for them to disappoint the markets. And we'll have to see exactly what's going on here. Accidentally put a bid on, so I want to make sure I clear that. But yeah, so just as we watch these markets trade, we'll come up and watch. Hopefully I'll be able to successfully bring that up so we can all hear it, and we can watch a statement together. And then what I would like to do, since we're live here, is I'd like to watch Chairman Powell's opening statement when he comes on. It should be 11:30 my time, and we'll watch that. It's usually about 2 or 3 minutes, and then we can watch a market reaction around this stuff. And there's something I want to talk about while I'm thinking about it, is that there's a trade that happens around these kind of events, and I mentioned it last time. It was the perfect trade where you can actually fade the whatever the reaction is. So as soon as they announce the statement, let's say the market spikes up or down, you fade, you actually take it in on the other side, and it's a very quick 2 to 3 minute scalp. If you're into that kind of trading, it's a lot of fun to capture those things. So something I learned on the trading floor a long time ago, and that was when things responded. It took a little longer for things to respond. That might be the same event, might be a 10 or 15 minute response. Now it's 2 to 5 maybe. Everything, all the things that happen on this planet, the time is collapsed, and how long it takes for these same events to happen. So yeah, so anyway, let's dig into a couple markets here, and let's go and take a look at some of the things I want to talk about today. You know, this is a big thing, and I've been talking about it, I think, in the last 2 videos, that the momentum just won't come back. You see PPM1 here is at a minus 0.36 right now, and we're only this. Yeah, this is new. We're printing new lows for the session right as we speak, and this is a little protection being taken. I thought they would do this a little earlier, but definitely we printed all the way up to 21. And matter of fact, let me just put up. Yeah, interesting. So R2, 34.22.55, the high today, 34.21.66. So basically an R2 hit, and we reversed right off of that. So hopefully some of you folks were able to capture that reversal off of there. It was right there for everybody. Now we're back under 24.11, maybe heading for an S1, and I talked about this last night in the video that we could see an S2 today. I think it's going to be quite easy for the Fed to absolutely just not be able to convince anybody of anything. And without the stimulus, the fiscal stimulus, I don't think anything they're going to do is going to work. There's nothing they really can say. I mentioned last night they've already went through A through Z as far as it goes. So this is the daily grid here and the chart. I still think there's a possibility of moving toward that 200-day moving average. The only thing that makes me skeptical, there's a guy that I happened to see a clip from on CNBC, a guy named Sam Stovall. He works for S&P. I don't think that guy's been right in my entire career. And he's talking about the 200-day moving average, so maybe that won't happen. But definitely what we're seeing here is a rollover. The break that we saw going back a couple of weeks ago was significant. It has changed the markets, and it's most visible here when we start to look at the weekly chart here. And as I've talked a lot about, this 10-period moving average, which has got a 0.66 upward slope on PPM1, is at 33.51. That's pretty much going to be the bottom end of this range for at the moment. So this pattern, like I said, this pattern is just gonna, we're not going up a lot, we're not going down a lot unless we can get below this 10-week moving average, and we're just going to be sandwiched into this very narrow range. Let's go and look at the monthly, because I don't get a chance to touch on that very often. Let me edit this, add some data. That's interesting. Looks like our friends at TradeStation might be having an issue because they won't let me go back in data for some reason. So hopefully that's a little glitch that will go back. So I have never seen that one before. Yeah, so just looking at a couple of things on the chat line right now is, yeah, they're talking about double stimulus, and you know, I have been absolutely telling you folks, this is exactly what's going to happen, and they're getting a lot of pressure on both sides of the aisle here as far as the markets go to do something. If they try to wait till election another 6-8 weeks, that's enough to tip the, just tip the whole thing over. So there's a lot of risk in the markets at the moment, economic risk. There's other things, and they have to fill this gap. And I've talked about this before. There's been a massive displacement of a lot of people in the economy, and the only way they're going to survive right now is through unemployment. There's just too many industries, and a classic example is like I was talking about. Some of the most populous states in this country are still mostly shut. So there's no way to really bring the economy back fully until those states get back open. And I don't know what it's going to take to get everything back open. Of course, California is on fire, and it's been I lived there almost 25 years ago when I was in California, and it was burning then too. So not a lot's changed. We went through a 9-year drought. So it's just, that place is just a constant disaster mode, earthquakes and all those fun stuff. So, but as far as the economies go, once they open these things back up, they will open, they've got to open. I mean, how long are people going to tolerate this stuff? So that's going to happen. And whether it's a vaccine or whatever, now they're talking about, fast tracking a vaccine. We'll see what happens here. So anyway, but this pattern is what I've been talking about. I'm going to try to go to a monthly again. That's really strange. Yeah, that's very interesting. No data there. So let's go over and see if we can get to. Let's look at the NASDAQ. Now NASDAQ is down almost 1% here. It's trading down at its 11,440 is the. Thanks, Dustin. Appreciate it, man. Yeah, no, I really appreciate it, Dustin. Thank you. And same thing with snapperisms. I know that's awesome, man. Thanks for the super chats. But this NASDAQ's rolling over. We'll go through all the fun stuff here shortly. Apple, Tesla has got crazy following. I don't know if it's just Robinhood people or not, but it's got a crazy following, and that thing just goes beyond everything. And I meant to mention we did get an RXT sell yesterday, and I will show you a couple of things once we get past the Fed and get into the show a little more than what we are right now. I'm going to show you some of the new market grid stuff, and at some stage, I'm not sure how we're going to capture this. May not be the best venue to put this out on, but I do want to. We're going to be expanding and putting out the market grid on a lot of symbols, and I'm just trying to finish out exactly how we're going to distribute those numbers. I thought I had it figured out. I've got one more thing to test today, and I may have it done. So it's like everything. You think you've got it, then it breaks, and we had a lot of stuff going on. Okay. Yeah, and I see somebody saying, yeah, we would definitely send out an email. And if you haven't, you can sign up for our email broadcast. We've been we've been super busy in behind the background here trying to get some things done, and we're small staff. There's only total of 4 of us, and so we're looking at doing a number of things and still trying to get that trade station stuff as well. And we're also, I'm just curious if you guys on the timeline would tell me how many folks used TradingView and as a platform. Just curious about that. So let me know, as we're looking into possibly putting indicators and some things on there as well. We're just researching things. We tried TOS. TOS is just an old clunky system that is open source, and there's no way to protect anything without putting your code on the internet. So that's unfortunate. Yeah, so let's see here. What we got going? Yeah, futures have bounced back just a touch. Composite, we're down 0.93. Yeah, just looking at this pattern that we're at right now, is that if I go over to a weekly chart, this thing is becoming incredibly vulnerable. You see PPM1 is at only a plus 4.6, and the 10-week moving average 11,160, the low 11,089, so we've been below it today. It's still supplying some moderate support, but it's becoming very, very vulnerable. And I just want to look at, I mentioned a number last night in the commentary, 11,572 last week. Yeah, so we came, this is interesting. I don't know if you folks, if you didn't see it, there was a video I did several weeks ago, about 2.5 weeks ago, about shorting Apple, but the main thing that was in that Apple video was this 3-day trade, and this works. Yeah, okay, great. I'm seeing some TradingView stuff. Awesome. But it's about that 3-day trade. So if you didn't watch that, look how to short Apple. That video is more about the 3-day trade than it is about Apple. There was a good trade on Apple, don't get me wrong, but this is the same thing where we get a reversal. We got this is setting up. This week we do not need to make a new low to keep the 3-week trade in this case, but we cannot take out this 11,572. Today's high, this week's high was 11,539. So we traded right up to it. Now we're a couple hundred points off of that high. So that's going to be critical. And if we were to close below the 10-week moving average on Friday, that would be absolutely devastating. Yeah, we'll go through Apple. We'll go through all kinds of stuff here very shortly. Yeah, so let's do that. Yeah, a couple things. This is I brought up the Russell 2000, and it's got a different configuration. I haven't really talked. What time are we getting to be? About 5 minutes from now, we'll see if we can get this whole TV thing going and make sure we've got it running. If it doesn't work, then we'll it should be fine, hopefully. But anyway, this Russell continues to be has to lead the way longer term. Let me go over to the spreads here so you can see this. I believe this is, yeah, so this is similar. This is the IJR versus the NASDAQ. And this spread trade, I keep telling you guys, this is going to be a giant trade. Regardless whether they all go down or whether the IJR or the small caps can lead the way up. Thanks, Supa. Appreciate it, man. Yeah, you're going to survive. But this pattern, this is way, way bullish from a spread standpoint, but it works two ways. It could be that the markets go down, but the IJR doesn't go down as much as the NASDAQ. So what this trade is you're long IJR and short the NASDAQ. You can actually authenticate this trade in the futures market, or doing the Qs against the IJR, do something like that. If we come over here, this right here is the December. This is December S&P versus NASDAQ, same kind of configuration, but this thing is definitely setting up a bottom, and I believe this is going to be a really good trade. I've been talking about this since, you know, we print a new low a little bit here, but this is the bottoming of this pattern here, and it's going to be pretty substantial for sure. All right, so we're bouncing back here, so we're coming into Fed. Let me I'm just going to go to a different screen for a second while I set this up. So hang with me, because I want to make sure we've got this working. There, we should be 5 minutes out. So hang on. So I just want to make sure, you guys should be able to see this okay. So I'm going to test the sound just so that we can, let me know if you can hear all this good, and then we can listen to the statement when it comes out. So we're hearing all that, right, folks? So Robert Nichols, not a complete 180 from what I said the other day. You guys got it. You have to understand, this is daily commentary. This is live stuff. Markets change. I change. I follow the markets. I'm telling you that we're still in this consolidation phase. You know, I didn't get bullish. I didn't change. I hear this stuff all the time. Thanks a lot, folks. But yeah, I hear this all the time. He flipped. He flipped. So, you know, guess you folks actually don't understand trading or understand following the markets. That's why we put out, those of you that are on the line that have the WaveTech tool, you know exactly what we're telling. We're still neutral. We still have a short position on from a week ago, Thursday. So stop it. I'm sorry. I get a kick out of all these folks that he flipped. It's different. Well, yeah, I probably, you know, I'm going to change my mind. I'm going to go with the markets. So I keep asking people, was it a good flip? You know, did I say it was going to go up and it went up? Oh, if I wouldn't have flipped, he would have said, oh, he was wrong. He said it was going down. So anyway, I get it. You know, I love you guys no matter what. Okay, so yeah. So anyway, we'll see how this plays out, and we'll see if we get a trade out of this thing. You see, we sold off, and now they're recovering right in. I'm going to turn this thing on. We're going to go watch this. Okay, so we're going full screen here, folks.
look, I think they'll be supportive, accommodative. They won't want to make any waves ahead of the November elections, and perhaps even after November elections. We get another FOMC meeting on November 4th, keep in mind. I will be interested in seeing what these September economic projections look like. Keep in mind, since the June projections, we did get a little bit of firming in the economy. So as David alluded to, GDP, inflation, unemployment, all could be upgraded for 2020. I'll be also looking to see what the 21 and 22 figures do, if anything, but lower for longer will be the key message coming out of this one.
John Bellows, as David points out, when he stopped cooing over there, the idea of some more elaboration on average inflation targeting might be helpful to the markets, either in this statement or in the press conference, what that means and how it will play out.
We'll do this just so we can see the reaction to market. So we're trading back up to 02. So here we go. I think there must be a lag in here because I think the news is out. So we're getting a little positive bounce. So you fade this probably.
So I think the Fed can make some progress today, and against the very low expectations, I think that would be a real surprise.
Very, very interesting. We await the decision here in about 17
Yeah, so
seconds.
here we go.
I don't want to squeeze another question in and put us.
Yeah, I think there must be a delay on this.
We go to Steve Leisman.
So we saw the little pop.
Kelly will take us there in just a moment.
Well, let's mention the setup, everybody. We've got the Dow 215 points, the S&P up 10, and the Nasdaq down 30. Steve Leisman has the decision.
Here we go.
Steve.
Federal Reserve leaving interest rates unchanged in its September meeting, saying it will maintain an accommodative policy of interest rates until its inflation target is achieved. And then it goes on to say, in answer to the comments made by the panel there, it will aim for inflation above 2% for some time. That is specifically now in the policy statement as a goal of the Federal Reserve. It actually makes note of that twice in the statement, that it was now aiming for inflation above 2% for some time in order to achieve that average inflation of 2%. It also says it will purchase additional assets, treasury assets, as part of an accommodative policy in order to support the economy. It repeats language from previous statements where it says it will use its full range of tools to support the economy, and says economic activity and employment have picked up, although they remain well below the levels at the beginning of the year. The statement says that weak demand and oil prices are holding down inflation, but the path of the economy depends principally on the virus. The health crisis, it says, will continue to weigh on the economy, and it says it poses considerable risk to the medium-term outlook.
Yeah, so here's the pop, folks.
Robert Kaplan from the Dallas Fed and Neil Kashkari from the Minneapolis Fed, different nuances on what they wanted in terms of policy. Kashkari seemed to want...
All right, we don't care what this guy thinks. Okay, I just wanted to hear what we heard. And we'll bring Powell's opening statement up here in a little bit. But basically, we're seeing the pop. This is probably the fade job where looks like there's going to be maybe a move up to 09, maybe 10 here. And this is that point where you fade. This is 3 minutes in. We'll see how this thing plays out here in a few minutes. It's already starting to kind of peak out here. But yeah, so yeah, they're going to keep rates lower forever. Let's face it. And you know, that's exactly, you know, nothing new there, right? So when Powell comes out, when he starts talking, we'll see if they have anything that he can add anything to it. They keep inserting this inflation metric that they're going to shoot above 2. Well, they've been saying they wanted to get it to 2 for a couple years, and they haven't been able to get it to 2. So how are they going to get it over now? I guess maybe here's the fade. See here, we're starting to sell this thing back down a little bit now. But the point of what the Fed's doing is absolutely, you know, maybe they're going to pump another $2 or $3 trillion into the market, but they still need that stimulus. And it's interesting that the politicians, everyone, I saw that the White House went live just a little bit ago. Nancy Pelosi was on one of the channels when I was getting ready for this. So we're looking at all the posturing by the politicians, and you know, so we're going to continue to see that. So don't be surprised if they come up with some kind of deal. We'll see what happens. So yeah, this thing's fading back a little bit. So we did get the pop. What did we hit? What did we get to here? We got to 0950, not quite 10. And so we're seeing a bit of a fade now. But so we'll see how the rest of that plays out. So let's go back to some of these other charts and take a look at what we're so let's go back and we'll talk about the Russell, and we'll do this until Powell comes up. I'd like to hear his opening statement, see what kind of reaction we get out of that. I don't want to listen to his comments, just that first minute or two when he makes his prepared statement. I think it's worth listening to. Yeah, there really wasn't much movement at all on this thing. So yeah, so yeah, one of the things that, you know, it's interesting because I've never run a channel like this before, and organically we've grown to about 22,000 subscribers, and it's been interesting learning a lot about dealing with the public on this scale. And you know, we've got you got to love social media, and I do, so it's all good. But I think what I keep trying to bring to you folks is a very consistent approach, and I use my database to guide me. You know that, so everything's data driven. For the most part, the sentiment is reflected through the data is how I read it. I don't try to figure out the sentiment changes necessarily, but all of the patterns, everything that I talk about on the channel have been pretty stable. Once in a while, you'll get some spike in and out of some of these ranges. But for the most part, you can see here, this market grid that I developed is very solid in capturing those ranges, being able to have some good parameters to talk about it. And you notice as we look here at the Russell that I've got on the screen right now, we've actually moved up the RXT number, the extreme projection for today, 1556. The highs 1564 were 1564 last trade. And you know, if we close up there, we could get a little RXT sell signal. And there is a video on the channel that talks about how to use these market grid numbers. I think there might be two: how to use the market grid number, and then another one is comparing Bollinger Bands to the market grid. They're totally different calculations. Bollinger Bands are standard deviation lines. These are volatility lines based off a rolling volatility and some Fibonacci projections. So this is much different, but you can see they do expand and contract as the markets change. And I mentioned, if we go back to the S&P here for a minute, you'll notice that the S&P actually is, let me go to the daily. The S&P is seeing some contraction here on the ranges. You'll see it squeeze down in the range. So when we get to that squeeze, typically what will happen is that there will be a rollover out of the squeeze where we'll get one more leg down. So let's draw a couple things on the screen here that I wanted to talk about today. So this pattern most likely is going to end up looking like an ABC pattern. And as I've said, we could go down to the 200-day moving average. That number is very similar to the 21-week moving average. We're holding support right now, and you have to ask yourself, you know, what's going to move this market higher? Maybe stimulus. I'm not sure anyone wants to make any big bets before the election. You know, if anything, I still am leaning toward the downside. So that there's a lot of vulnerability in this market right now because PPMs are negative. We're on a short-term basis, we have a downtrend. There's no uptrend. And so I think people that watch this channel will get confused from the standpoint of what my so-called flip-flops is, that we're talking about day-to-day movement. So, you know, I always say we're going to look, let's take a look at the chart, see what tomorrow's going to tell us. And so days change, markets trade in ranges. That's exactly what we're seeing here, is just this consolidation range. Now, the last time, if I move back a little bit on this chart on the screen, if we go back, right before the big decline, this is going back to February over in the far left. Let me go full screen so you can see this a little better. Over on the left here, you see this huge contraction just skinnies out on the market grid right before a major collapse. And those things happen often. And you can see we did a similar situation here where it squeezed down. We got the RXT sell on Thursday on 9/2. Those of you that watch the Wave Tech or any of that stuff, we actually got sell signals 9/1, 9/2, 9/4, and then 9/9. We actually had one of our ETF strategies go to 100% cash in that 5-day period, and went to initially to 60% cash, to 80, and then 100% out. And it's still out right now. And it's likely to stay out here for just a little bit. But we're starting to skinny up these ranges, which tells me there's a contraction going on. So you'll see the same thing, I believe. Let's go over here and take a look. Let's bring up. Yeah, I had one of my screens. I accidentally deleted something off the screen, then saved it. And I have a sense that right now TradeStation is having some issues. I'm putting things in. It doesn't have data in some places, so maybe there's a little bit of an issue going on. Yeah, and yeah, so I just see something on the line. Ignore the trolls and the naysayers. I get that, but I like addressing them too. See, usually, this channel. The Kendall Report channel has a 98% like ratio, so I get it. There's just a few folks, and it's it's an honor to get that. I was talking to a friend that knows social media. That's like insane numbers, especially with the type of views and things we get. So I appreciate everybody. I really do. So I just like calling these guys out a little bit once in a while. Listen, I work hard to present a lot of information and to bring some things out that are going to help us all make some money, and that's what it's all about here. Yeah, it's funny. I'm trying to load in the VIX, and it just says loading. I have no idea why why it's doing this to me. Let me just look one more page here. Yeah, so what time we're getting to be? 1:15 or 2:15 New York time. So yeah, so but this is important. What's going on here from that standpoint. Let's see, we've covered that. Let's go ahead while we're doing this. Let's pop over. Let's take a look at gold here. We'll start to broaden out and look at some other markets here, because I think then we'll come back and we'll watch and see if there's any reaction back with the Fed right now. The futures just turned negative again on the session, and we're printing 3403. So that reaction is definitely what I was talking about earlier, where you get that big snap up and then snap back. Yeah, Apple down 2.3. I don't think Apple's presentation yesterday was pretty lame. I don't know what you guys thought, but I thought it was pretty lame. Yeah, so, but gold, it's interesting that gold and the stock market's almost exact configuration. Gold is doing its best to try to break out of here. We're printing 1971. We're still kind of locked in. I mentioned this in last night's video. We're seeing some upward movement on the PPMs. They're trying to expand. We got PPM 1 at plus 0.13, so not at trend level, but it's at least turning up here. The weekly almost looks exactly like the S&P. And we have a plus 0.76. So if you haven't watched this channel, these PPMs the PPM stands for price pressure momentum. And what they do is they're attached to the 3 averages. Remember, I'm an old school guy. I use simple moving averages. I use bar charts. I don't use candlesticks. I'm just not a big fan of them. I like the old. I just need to know where the high, low, and the patterns are. That's what's guided me for a lot of years. So I stick with that. But we're seeing some good momentum. This red line right here is absolutely the demand line for gold. Right now it's at 1948. I mentioned in last night's video, if you get anywhere close to around 53, you can buy gold against this number, no problem. I just wouldn't have a high expectation for it to move out of here anytime soon. Yeah, I don't have a way to zoom in. I wish I could find a way to zoom in on this thing. I have no idea how to do it with this software. That would be really nice, actually. And I don't have any way of zooming in. So, yeah, no zooms on this stuff. So I apologize. I do have one tool that can zoom, but then it locks everything down. It's just not good. I'm gonna have to look into that, because I would like to be able to zoom into a chart, and it just doesn't do that. Yeah, so let's see if we get monthly data on gold. Okay, good. All right, that's there. I'm going to go. So the monthly, I talked about this not for a while. I haven't brought up the monthly long-term gold charts, but this thing is literally going to be locked in this range for potentially a couple months. If we look at the grid over here on the left, you're going to see that the month of September 2023 is R1. 1933 is, let's see here, yeah, 1933 S1. We've had a 1911 2001 high so far this month. I don't know that we're going to be able to expand this. I know we're only mid-month, so we'll have to just keep going, but it might print up to R1. That would be surprising, but there is an upward bias on the long-term charts. There's an upward bias on the weekly charts, and there's a slight bias building on the short-term or the daily charts right now for higher prices, but nothing big. Yeah, so we're getting some, now we got NASDAQ down 1 point, let's see, the futures are down 1.14 now, so we're continuing to see some selling come in there. I'm going to flop over to another screen for a second. Yeah, so we're looking at, yeah, back to 12. So yeah, it's interesting how we're seeing some of these charts move here. And I don't want that one. Hang on. Let's go back over. That's interesting. I just want to look at the spread. This is the MDY versus the NASDAQ. So all of these things continue to bottom. I just looking at some strange movement over here on the okay. What time we got? 10 more minutes. So let's haven't touched on silver for a while. So let's go and do a quick silver review. And then after Powell talks, we'll look at what the reaction is, if there is any, and then we'll just dig into we'll start going through stocks and other things that you folks want to talk about. We'll go to that level next. So hang on. Okay, so here's silver daily, same, very similar patterns to gold, and we need to get above on silver. We definitely need to see this thing print up around 20, let's just call it 28 bucks or better. If otherwise it's going to stay in this pattern. 40-day moving average 26.66. That's going to be a big number. We go over to the weekly here. Yeah, it looks like bear with me. I'm getting a message that Paul's coming on here. Hang on 1 second. I'll kind of watch this on a different screen so we don't have to watch that. And I'll mute it out so I can bring that on when Powell comes. All right, so yeah, so silver on a weekly is same type of demand line, and if you see silver anywhere near this 25.70, say between 26 and 25.70, that's going to be a screaming buy. But once again, this thing is locked in this sideways range. There's just nowhere to go with this thing at all. So we'll see how it all plays out. Let's go to monthly, and you'll just see more of the same here. Is this monthly is going to be locked in the ranges. If you look at the grid here, I want to do something here real quick. Yeah, I have no idea what's going on here. Everything's now I've messed that up. I would say TradeStation's having some serious issues right now. When I try to bring up a symbol, it's just kind of loading. Nothing's coming up. That's interesting. It's not going to make for a good live stream here today. Yeah. Anyway, yeah. So let me go back to the silver, and we'll finish that, and then we'll bring. I'm watching for Paul to come back up, and we'll let that. Yeah, so silver, the range for the month is, it's a wild range. We printed last month, we printed a high of 30.07, and the grid says 29.90 is R1. We've been at 29.23, so that's probably going to, we've probably seen the better part of this month's range, but anything's possible. Based on the weekly here, you could see some expansion. You could see it move up towards a higher end of the grid here, maybe print up to this 27.90, 28.05, but we need a close above 28.05 to get this thing going. Until we get that, nothing's going to happen here. Okay. Yeah, I do think there's sort of a ceiling here right now as far as the S&P goes. Like I've been saying on my videos every night, is we're sandwiched, you know, pretty much between the 10-day moving average and the 40. We're trading just a touch above the 10-day, but this is somewhat concerning here. Let me see if I can. I'm just trying to see if I can get some things to change here. Okay. We got about 4 minutes. They're on commercial break right now, so I'll bring that back up here in a minute. We'll listen to Powell's comments, and then we'll see if there's any reaction. So we did see a reaction back down, and now we've rallied back up, and we're printing up into a range. And I keep telling you folks that one day we're going to do a short-term analysis so you can see exactly what this this dragon formation is all about, which is setting up right now. I'm kind of anxious to dig into these individual stocks. Let's see what kind of comments. Okay. Yeah, I don't want to get into any dialogue here. I'm just looking at some of the comments on the lines. And yeah, we'll definitely be going through some of these stocks here in a few minutes. Yeah, well, let's see here. Yeah, they're back out of break here. Powell should be up in about 2 minutes, so we'll go to there. I just brought up the DXY, brought up the Dow. We're currently at 93.05. I've been talking about the last couple times I covered this, is that the 10-period moving average is right now 93.50. We printed very close to that the other day. 93.86. The high was 93.66. But these PPMs are setting up a potential major bottom. I still think eventually this is maybe it could carry us all the way into maybe first quarter of next year, but we're likely to see the potential of a move back toward the 200-day moving average. That's been a big support line. That will be resistance now. We also have a lot of other resistance to encounter on a weekly basis on the Dow. So the Dow is going to have a lot of resistance from the standpoint of getting the markets to move much above 90, 94, 94 and a half right now. Is going to be somewhat of a ceiling if we were able to get up there. On the downside, 92.60 range should be the bottom end of this range for the time being. Yes, I see somebody mentioning Snowflake IPO. That's just more supplies on the market. You know, IPOs are interesting, especially when you got a bunch of people going on it. I guess the reason why DraftKings have been so strong, the stock, is that they've got some games that people start betting on again. So maybe those folks aren't hanging around the markets as much as they were before. That was the big story, if you recall. Yep, he's on. I see him. All right, here we go, folks.
Powell is taking the podium. Here he is delivering his press conference after their decision today.
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Since the beginning of the pandemic, we have taken forceful actions to provide some relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. Today, my colleagues on the Federal Open Market Committee and I made some important changes to our policy statement, including an update to our guidance for the likely path of our policy interest rate. Guided by our new statement on longer-run goals and monetary policy strategy that we announced a few weeks ago, these changes clarify our strong commitment over a longer time horizon. Before describing today's policy actions, let me briefly review recent economic developments. Economic activity has picked up from its depressed second quarter level, when much of the economy was shut down to stem the spread of the virus. With the reopening of many businesses and factories and fewer people withdrawing from social interactions, household spending looks to have recovered about 3/4 of its earlier decline. Nonetheless, spending on services that typically require people to gather closely, including travel and hospitality, is still quite weak. The recovery in household spending also likely owes to federal stimulus payments and expanded unemployment benefits, which provided substantial and timely support to household incomes. Activity in the housing sector has returned to its level at the beginning of the year, and we are starting to see signs of an improvement in business investment. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up since our June summary of economic projections. Even so, overall activity remains well below its level before the pandemic, and the path ahead remains highly uncertain. In the labor market, roughly half of the 22 million jobs that were lost in March and April have been regained as many people return to work. The unemployment rate declined over the past 4 months, but remains elevated at 8.4% as of August. Although we welcome on this progress, we will not lose sight of the millions of Americans who remain out of work. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 7.6% at the end of this year, 5.5% next year, and 4% by 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, the high level of joblessness has been especially severe for lower wage workers in the services sector, for women, and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. The pandemic has also left a significant imprint on inflation. For some goods, including food, supply constraints have led to notably higher prices, adding to the burden for those struggling with lost income. More broadly, however, weaker demand, especially in sectors that have been most affected by the pandemic, has held down consumer prices. And overall, inflation is running well below our 2% longer run objective. The median inflation projection from FOMC participants rises from 1.2% this year to 1.7% next year and reaches 2% in 2023. As the economy began its recovery, COVID-19 cases, hospitalizations, and deaths also rose. The reimposition of some social distancing restrictions, as well as more cautious behavior by many individuals, have succeeded in slowing the spread of the virus. As we have emphasized throughout the pandemic, the outlook for the economy is extraordinarily uncertain and will depend in large part on our success in keeping the virus in check. All of us have a role to play in our nation's response to the pandemic. Following the advice of public health professionals to keep appropriate social distances and to wear masks in public will help get the economy back to full strength. A full economic recovery is unlikely until people are confident that it is safe to re-engage in a broad range of activities. The path forward will also depend on the policy actions taken across all parts of the government to provide relief and to support the recovery for as long as needed. The Federal Reserve's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. We remain committed to using our full range of tools to support the economy in this challenging time. The changes we made in today's policy statement reflect our strategy to achieve our dual mandate goals by seeking to eliminate shortfalls from maximum employment and achieve inflation that averages 2% over time, as we articulated in our statement on longer run goals and monetary policy strategy. We view maximum employment as a broad-based and inclusive goal and do not see a high level of employment as posing a policy concern unless accompanied by signs of unwanted increases in inflation or the emergence of other risks that could impede the attainment of our goals. And we believe that achieving inflation that averages 2% over time helps ensure that longer-term inflation expectations remain well anchored at our longer-run 2% objective. In turn, well-anchored inflation expectations enhance our ability to meet both our employment and inflation objectives, particularly in the new normal, in which interest rates are closer to their effective lower bound, even in good times. Hence, as we say in our statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these outcomes, including maximum employment, are achieved. With regard to interest rates, we now indicate that we expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessments of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. In addition, over coming months, we will continue to increase our holdings of Treasury securities and agency mortgage-backed securities, at least at the current pace. These asset purchases are intended to sustain smooth market functioning and help foster accommodative financial conditions, thereby supporting the flow of credit to households and businesses. We believe the strong policy guidance we are providing today will serve the economy well by promoting our goals through the many possible paths the recovery may take. Of course, as we note in our policy statement, we would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of our goals. The Federal Reserve has also been taking broad and forceful actions to more directly support the flow of credit in the economy for households, for businesses large and small, and for state and local governments. Preserving the flow of credit is essential for mitigating the damage to the economy and promoting a robust recovery. Many of our programs rely on emergency lending powers that require the support of the Treasury Department and are available only in very unusual circumstances such as those we find ourselves in today. These programs serve as a backstop to key credit markets and appear to have restored the flow of credit from private lenders through normal channels. We have deployed these lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. When the time comes, after the crisis has passed, we will put these emergency tools back in the toolbox. As I've emphasized before, these are lending powers, not spending powers. The Fed cannot grant money to particular beneficiaries. We can only create programs or facilities with broad-based eligibility to make loans to solvent entities with the expectation that the loans will be repaid. Many borrowers are benefiting from these programs, as is the overall economy. But for many others, getting a loan that may be difficult to repay may not be the answer. In these cases, direct fiscal support may be needed. Elected officials have the power to tax and spend and to make decisions about where we, as a society, should direct our collective resources. The fiscal policy actions that have been taken thus far have made a critical difference to families, businesses, and communities across the country. Even so, the current economic downturn is the most severe in our lifetimes. It will take a while to get back to the levels of economic activity and employment that prevailed at the beginning of this year, and it may take continued support from both monetary and fiscal policy to achieve that. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Finally, I would like to take a moment to recognize the passing of our friend and colleague, Thomas Laubach. His outstanding analysis and advice have been indispensable to the FOMC and have played a key role in the policy decision.
All right, folks, that's enough of that, right? I love the comments. And by the way, he did everything that we all knew he would do, and I talked about multiple times. He mentioned lending powers, not spending powers. I believe it was 3 times, not once, but 3 times. Full range of tools, also put that out there. And I love a lot of the comments that you folks are putting up there. That was entertaining to watch you folks chatting and watching that. So that some really good stuff out there, I think. And from the standpoint of, they managed to rally the markets up. We printed up into 1950 high, so we're definitely seeing a boost. We'll see if this thing can hold. I'm not sure. The Fed's good at pumping, and we'll just see if there's a dump after this, whether these gains can actually hang in there or not. But I think some folks brought out some really good some really good comments that I also saw, that these folks are he tied together the Treasury, the lending powers, not spending powers. He says that over and over. He's been saying that since March. This has been the dialogue that he continues to spout. And they also have in any federal message right now, I think I saw somebody say something, he's using all the algorithm words, and he is. It's all those words that that these little speaking points that trigger all the algorithms. That's exactly what was going on there, and you saw the markets rally along that. So it was he's good, you know, but we'll see. You know, now when he stops talking, and he's not doing the algorithm words. You already see we've already 5 handles off the highs here on the screen. So we're seeing some selling come back in here a little bit off of these highs. Yeah. So, but I believe that's exactly what was going on. The algorithm highs, we're seeing everything kicking in and buying, and you know, there's nothing. We heard nothing new. We heard more of the same, and we'll see how this plays out, because a lot of times after a speech like this, you know, the markets will start to fade, and this is the, you know, the reaction. But I think that was right. I don't remember who said that, but that was a good one. So yeah, I see somebody. Yeah, let's go ahead and I don't know that there's anything else. I wanted to watch that stuff. It helps me in my analysis. And as I said, all these live streams, a lot of this live stream that I'm doing here is I'm getting these are my notes from today's show, just while we're going through stuff. I get an opportunity to go into a lot of in-depth viewpoints on multiple level charts. So let's go ahead, and I'm going to open up. Let me get another piece of paper here, and let's get a list of stocks that you folks want to talk about. So let's go ahead and open up that, and let's get. Yeah, oh, that's funny. Okay, I got to do this. So the crystal ball. I know you guys will get a kick out of this. This might become my signature deal. So yeah, it's kind of interesting. But yeah, so it doesn't work very good. I've tried putting it up to the charts. It doesn't work. But anyway, yeah. Anyway, have fun with the that. So okay, let me write down some of these. Okay, folks. All right, hold off on the stocks. I got quite a few, and let me write just a couple more. Okay, let's go ahead and kick into these things and start taking a look at some of these stocks. And listen, obviously the two most popular are going to be our friends at Apple. I just want you folks to notice that the S&P has already dropped like 25 handles already. We're down to here we are at 3405. Hang on 1 second. Yeah, so we printed 28, and here we are back at 3405. So that was the fade. As soon as the algorithm talk stopped, then the market got faded. So all right, so let's dig into these stocks. We'll start off with Apple. Apple is in a huge downtrend. Okay, this thing continues to be under pressure, and as we look at this, PPM1 is at a minus 1.72. This is a monster downtrend. The top end of this that's interesting. Futures are just about to go negative again. But the top end of this range, 117.34, the high 116, that's where the 10-period moving average in. That is going to be a ceiling, and that is dropping at almost 2% per day. So we're looking at 115, 113, 112. By Friday, 112 will be the ceiling on this thing. So you're going to continue to see this print down. The 113.48 is the 40-day moving average. We flip over to the weekly, and what we're going to see there is that 10-week moving average, which has a 1.60. That's going to be probably a bottom end of the range, 111. We'll call it 111.68. So there's about $2 more down, and we're going to have support, pretty substantial support. But I still think that a lot of these markets are still trying to roll over. It's like watching, super slow motion, and that's going to continue to happen. That spike that we saw right here on, when Apple traded at 137, that was the high. We're likely to stay in this grid. If we were to print S1 108.59 this week, the high 118, R2 was 119.23, so pretty close hit on this stuff. That is definitely, that was probably the high of the week. We'll see how this thing prints out, but we could see as low as 108.59, and a lot of pressure here going on. Let's do Tesla. We'll do the stuff that I know a lot of folks are following. And let me go to daily first on Tesla. So we penetrated through RXT yesterday. It didn't close above it, but we're now down 3.89%. We're the support. This is a strange configuration, and this one's really hard to read because of the amount of volatility. It's almost like looking at a silver chart because it's got this current volatility in Tesla is probably about close to 2 standard deviations above what's normal. And what we're seeing there is the markets will extend up and down on these crazy sell-offs and rallies. And I went through a lot of details, and we'll go through a couple details because this is a heavily followed stock. But let's go over and look at the weekly. And I talked about this in great detail, I think 2 weeks ago when this thing was breaking down. But let's take a look at something. I want to draw in a couple lines here. I talked about this before, where we had, from a wave count standpoint, this is the completion. You could call it completion of a 5-wave. I'm going to show you something different here, but this would be wave 1, 2, 3, 4, and 5. And now we've got an A and the snapback B. We should get some type of move back into the grid. I'll take these lines off so we can talk about the numbers, but we should see this thing. We've already printed up almost to the extreme. Let me take this off so we can see this. The extreme for this week was 465.32, the high 61.94, last 445, so we're about 20 handles off the top. But we're looking at the way this this thing is printing, you're going to see this move back toward the 10-period moving average, just about everything. And it seems like every time we do these and we start to go through a lot of stocks, the same patterns show up. Everything's similar but different. And there's a lot of streams of the way that the patterns are set up and things that are absolutely correlated almost perfectly to one after another, especially on the big cash flow stocks. Yeah, so I see somebody, that would be awesome if you guys hammer down and smash that like button. Let the YouTube folks know we're doing something good here. But yeah, so this pattern here is, we've seen the extreme. We basically bounced, we went through that 10-period moving average, and this is what I'm talking about here, is some of the characteristics you would expect it to hold. It's going to go just a little further and then bounce back from after that. So yeah, okay, so let's go ahead. Let's move on. I've got a lot of stocks here to go through. So this is weekly Peloton. Not a lot there. There's not enough data. We'll have to go to daily. So very similar pattern. And we did get an RXT sell way back here on 9/2, and we got a signal for a 2 to 3 day decline. We got that. Now we're just working this grid and we're trading below the 10-period moving average. 10-period moving average has turned down, and this is like a sharp decline in the momentum, suggesting that this thing is just going to get locked in this range. The grid right now, if you look at what the grid is for, this is a daily, you've got this massive range about $20. We're not going to see that, but you're probably going to see somewhere between R2, S2 on a daily basis. And I'm going to show you folks something, and there's quite a few people on here. I'm going to do two things. So there's no weekly data, but I want to show you something that I've been working on. This right here is the market grid, and you see RXT, you can see all the numbers at the top. This thing also triggers and lets me know what's been hit on this. This is going to be coming into the, it's going to show up two places, one in WaveTech, or it will be bundled with WaveTech on the Portfolio Expert website. And we can do thousands of symbols, but they're going to be, I'm working on a way to try to bring up so you can search and find symbols. There's a couple things we need to do. For the moment, the initial rollout is going to be about 50 symbols. And I'm going to show you one more thing, because I want you, if you haven't signed up here, I'll bring this. So here's what I want you folks to do. If you sign up for exclusive, you go to kendallreport.com, put your email address in here, and I'm going to have you sign up. And when you do comments and suggestions, if you've already signed up, we're going to send out an email to you. And what I want from you is, what symbols would you like to see on the market grid, including individual stocks, ETFs, and indexes. And I'm glad, as long as I have access to them. I know we have an international community, so if you have some international community stuff that you want to, indexes that you want to follow, like Nifty 50 in India or any of those things, just let me know. And I'll try to see what data we have and get everything out there. So, but sign up here, and then tell us on the comments what you'd like to see in market grids. You've been watching me on Twitter and all those kind of things. And then the last thing I'll just tell you while we're here, is if you go to this page and go to the WaveTech page, you'll be able to sign up for the software as well. So that's where you'll be able to get access to all of this ultimately. Okay, so I just wanted to bring that up but we do have the ability to track a lot of symbols. I've been told I can do up to almost 3,000. Thank you for the super chat. Appreciate it. And the so you're good. Yeah, so we're going to build this out and see what we can get going. And yeah, thanks a lot. Some of your handles I won't pronounce well, but thank you for the super chat. Really appreciate it on the JPM comment. Okay, let's keep going back to the stocks. But I wanted to mention that because this stuff here is going to update real time. And yeah, so this is very interesting. I've had TradeStation did an update 2 days ago, and I've been seeing some really quirky stuff. Like right now, I'm clicking on stuff and nothing's changed. So at the moment, we're stuck here. I'm not sure what's going on. Try it again. Yeah, I would say I'd say it just crashed. Let's try it again. Pretty picture, right? Not what you're here for. Yeah, I agree. We should go through the FAANGS. Absolutely. Yeah, I have no idea what's going on here right now, folks. Bear with me. Yeah, that's a good idea. We'll put a link in the description on the video when we're done here on how to access some of the stuff I just showed you. Yeah, nothing's coming up right now. Very strange. Yeah, so this is fun in the middle of a live stream. I am going to attempt to, I'm going to have to restart the platform. Yeah, we're going through a stroll of the Rockies, right? I don't know. I think this is Switzerland. Yeah, TradeStation crashed. Interesting. Hang on, folks. So at least I can come up on screen. This thing is booting up. Yeah, thing completely crashed. They did an update the other day. Windows has been doing updates, all kinds of mess up there. It's amazing how much it appears Microsoft wants to be Apple. So many of their new update policies and all that is going. Yeah, that's what I did. I did the task manager, stop the TS process. Exactly what I did. So it's coming back up, so bear with me. Yeah, it's definitely, yeah. Anyway, yeah, let's, it's almost up. It's almost back up, so we'll be back and running here in a minute. But yeah, we'll put some things in the description on this stuff. These market grids are just crazy good, especially if you're trading stocks, including the weekly and the monthlies. If you want to put verticals, do some option strategies, there's a lot of stuff that you can do around with just the grids. You don't even need to, you need to have some general understanding of market direction. Looks like we're back up. So let's go back over here and see what we got. All right. Yeah, so, okay, let's go back and let's do Bank of America. I've got some banks here. Daily Bank of America just hovering below the 200-day. PPMs are trying to turn up, but these financials have been under a lot of pressure lately. Let's go to the weekly, see if there's anything. Yeah, I mean, what a mess. The 200-week moving average has been a the 200-day moving average has actually been the 200-week moving average has been the ceiling here. We popped above it a little bit. PPMs not are positive, so there's some pretty good support here, but we're going to have to get above probably this high over here to bear with me, just trying to get everything back from where I was. Yeah, so we're likely to get back above the this high right here around 2670 or so before we're going to see it move back up. But there's just not a, I mean, it's a nice basing pattern, but you know, with the Fed just telling us that we're going to be down forever, well, that's a shame that thing crashed. I only lost about 200 viewers on that little snafu there. We were right at 1,000. But anyway, the but this pattern, nothing really there that I see. Let's this one should be interesting. The NKLA, right? This is in the news. Let's see if I can go to a daily. Yeah, interesting. Here was right here was an RXT market grid sell on 9/8, and 2 to 3 days down. We got 3 big days down and then a reversal, and now it's stable. So we're back to the 200-day moving average or close to it. PPMs, we look at those down really hard. You get a lot of overhead resistance, 37.50. This stock will take at least another 8 to 12 sessions to bottom out here to set up a pattern that's going to be tradable. And this would be really good for probably to have 1.2 and WaveTech. If you're a WaveTech user, probably look at this for a buy off of 1.2. That'll probably be the way to try to play this back in and see if you can get something going. Yeah. Yeah, I see Jake's out there promoting buy physical silver. Yeah, but you have to pay a premium, right? So let's yeah, so let's go ahead and keep going through some of these. Let's hit shop. And then I'll have you guys give me another round of stocks, and we'll go through the FAANGS, and I'll try to get caught up here. It's 12:09 my time, so we've got final hour of trading. Shop is definitely pressing down at the bottom end of its range right here. Low 902, 901.82 is S3, so it's printing S3 right now. Downward pressure is huge. This stock's in a big downtrend, and a lot of these stocks that get played out in the pandemic, there's a rotation going on, and if you this is something that let me just bring something up here. This is something that I've talked a lot about on this is the WaveTech tool. If you go to research, you folks may remember that watch the channel. One of the things that has happened quite a bit actually is the monster amount of symbols. There have been 16,000 sell signals since 9/3, so a complete implosion of the database. That's actually over the last almost 3 weeks. There's been a lot of sell signals coming in, and we're starting to see some buys come back in. Last night we saw about 650 net, I think it was. So we'll go from there. Let me write down a couple of. So, okay. Yeah. So we're seeing the database rotate. I've been talking about this a lot. If we stay under the 26% bullish right now, we're 17. If we spend another week or so below that level, then we're likely to see another one of these rollovers and retest of some of the lows that we printed in this pattern so far. So let's go back to some stocks. Let's do NVIDIA. NVIDIA also has 0.93 ppm1. We spiked a bit above it on a higher opening this morning. We're now down almost 3%. It would look to me that this stock is probably going to head toward its 40-day moving average, 475 maybe. That might be enough, but you've got huge acceleration. This downtrend is accelerating. And so you're just, yeah, this thing's is gonna stay south for a while. Let's look at the weekly, see if there's anything there. Yeah, weekly giant range, 10-week moving average, 468, 475. That's where you're heading. So it looks like that's the case here. Yeah, it's interesting that the NASDAQ is now down the NASDAQ futures are down 1.05 again. So interesting flip on all these markets. All right. Okay. Next, we'll do this is the weekly chart of Charles Schwab. And it's interesting because a lot of these, it's funny that Schwab was the original disruptor, and they're now become mainstream to a large degree. And they did that. I did cover Tesla, and we'll have everything on the timeline here when the rebroadcast comes up. So Schwab, there's nothing here. This is a stock that's not going to do any good. You probably collect a lot of premiums doing some verticals on this thing for sure. This been locked in a range for months now. I don't see anything there. This is weekly. I can't imagine daily will give us anything. I'll flop to that real quick here. Yeah, so that's interesting. Schwab is breaking out of its high end of the range today. It's up some pretty good numbers. So we're looking at PPMs trying to turn up. So I just looking at the weekly, it doesn't look like much is there, but the daily, I'm glad I flipped over there. The daily looks like if we close above here, it's still going to most likely fall back into the trading range again. But this is a little more encouraging. From looking at this view than it was at the daily at the weekly. So once again, maybe get back to 200-day. That's about all that's in here. There's not a lot there. So let's go to the worst bank ever, Wells Fargo. Let's go to weekly. This stock probably doesn't even deserve to be at 25 bucks, but we are getting a base. We are seeing PPMs turn up, so maybe we can move back toward the 40. But if you look at the 40, it's declining at 2% per. This is weekly per week, so we're looking at about $1 per week. So maybe if you can get back to around 30 bucks, maybe 31 on this one. All right. So that's about it on this. It's at least stable down here, and the PPMs are turning up, so that's encouraging. Yeah, I don't know if any of these symbols are around. So this is Snow started trading, and up 3%. There's not. Maybe we could go into a 5-minute graph. There we go. So that's what Snow looks like it's doing. It spiked up and now starting to maybe sell off a little bit, and then Frog. Similar. Everybody sold at higher opening. They have floating stock for sure. Probably the insider selling, just joking. But whatever free floating stock was around was getting sold, and we're up 3%. But this is one of the things I talked about on a couple of videos ago. Is if one of these IPOs that are coming out this week, we've got, I think, get the name of the something Logic is coming out, I think, tomorrow. That if any of these IPOs go bad, and there's some more next week, but these folks are rushing to market here after this collapse. Matter of fact, they already were on schedule to get these deals done, but this is new money on the street. So yeah, WFC is the worst bank, and I would have to say JPM is probably a pretty good bank. Let's do it. Let's flip out of here. I have to go to a 5-minute. Let's go here and let's go to JPM while we're looking at that. Yeah, all the banks though are in trouble. You guys help me out. What's a good ETF for financials? What's a good ETF for that? Let's take a look at that. Yeah, so all the banks look similar. Wells is way down at the bottom, but any of the banks, let's see here. Citibank. They just brought in a new CEO and stocks dropped almost, quite a bit. It went from 51 to 44. So 10, 12%. Oh, wow. You guys, okay. XLF. That's what I was looking for. Thanks. Appreciate it, man. Yeah. So we're hovering right at the 200. This is 200-day moving average. PPMs are trying to turn up. This financial sector is the biggest sector in the market. So this is an important to watch, but it looks very similar to all these bank stocks, as it should, looks exactly the same here. Is that what we're seeing is this configuration trading just below the 200-week moving average. If we get above that, there's quite a bit of resistance right here, actually, right where we're trading right now. We're at the green line here. Where I've got my cursor, the green line is the 40-week moving average, 2540. It's actually declining at 0.56. That gives only a 20% probability to close above 2540. We're trading 2504, so we're trading right up against resistance. If it can hold here for another week or so, maybe we can start to move that out as far as that goes. Let's put XLF. I'm just curious to see. Let me put XLF in the WaveTech tool if I can get it right. Let's just see if there's any weekly positions here. Nope. Yeah, so nothing on, sorry about that. Nothing there at all. So, but I would look, if you're a WaveTech user and you're looking for the banks, that's one of the things that I'm making a note to myself to watch XLF for an intermediate buy. When we get that, we could see the banks start to come alive, and that would be a sign of a second rotation as well. And that's something looking at. So let me clarify something here, and I think that it's important to bring this out. On a short, people are always trying to put me in a box. They always have for a long time. Even when I was on a trading floor, I had some interesting nicknames. They used to call me Dr. Given. But one of the things that I want to point out is on a short-term basis, we're negative. We've seen a liquidation of our database, and there's a rotation going on in the database. On an intermediate database, we're still around 68% of the stocks in our database are still long. So intermediate term, we're long, and we'll say bullish, looking out 150 to 180 days out. So those are market days. So that puts you out the better part of a year. Those things are likely to continue to be positive. But on a short-term basis, we're seeing this rotation. The possibility, if we did reset all the way down to a 21-week moving average on a lot of these charts, it would be a huge opportunity. That will be the point to buy. And, it's not, like I said early in the comments, if all we have to do is get California back online, just that alone will drop the unemployment rate from this 9, probably down to about 7.5%, maybe 6-8%. You get the continuing claims will drop. I'll be talking about that stuff on the video tonight. But once they get these states open, they got to open. We can't stay closed forever. If that's, we're going to have to take some risk, and that will happen at some stage. So the point of this is that once all that stuff happens, this will rotate, and there's still longer term, more upside on the markets. So I think on on the day-to-day videos, and I just want to address this because I see it, not a lot, but I see it enough that I want to address, is that, sometimes they're just thumbnail readers where they'll look at all that stuff. Super, thank you for the super chat. Appreciate it. You're really just looking at day-to-day movements and volatility that happens, and that's what I'm addressing on the daily videos. Now I do 5 videos a week and 2 live streams. So if you haven't subscribed and you're watching, we got quite a few folks out there. If you're not already a subscriber, subscribe, hit the like button and subscribe. And videos come out every night. I would like to have them out at around 11:30 Pacific time, PM, that is the night before the market trading, but they have been getting out pretty consistently right about 1 o'clock. And that's all on me. It's been taking a lot more time to get research done and get set up to do everything. So let's go back to some stocks. We covered the financials, and let's go, probably appropriate here, as go to TLT. We're seeing this is locked between the moving averages right now, 165 on the upside, 158 on the downside. So we're seeing just a lot of sideways stability, and there's really nothing here. PPMs are actually negative. The PPM 3 is a plus 0.38, which will be your support line, which is what I just mentioned, 158. So you're sandwiched 158, 165 for multiple weeks here. Yeah, I see somebody said it won't open until Biden's elected. I'm not sure that's going to happen yet. I think it's a little early, although they're making a big play, aren't they? Yeah, California is burning. Yeah, so let's do Duncan. Let's go to daily Duncan first. Basically a consolidation, but an upward slope. Short-term trends are all up. You got a 0.35 PPM1, PPM3 is 0.33, so you got a nice solid uptrend here. Going to weekly, you're going to see this thing continue to move up toward the upper end of the grid. 79.53 is the upper grids. R3 78.62, high today 78.59, so right into the grid. Low 76.15. We never even came close to any. This is a weekly. There's been no negative numbers at all this week on this stock. So let's see. Let's put some things on here I haven't had on there. Let's go ahead and, yeah, okay, this is good. And I should have had this on for some of the other stocks as well. So there's some Fibonacci price projections for Duncan. These are big numbers. 94, which is big numbers, like 35% gain or something. I'm not sure what would do that. Might be a little far-fetched, but that's what the Fibonacci pattern's suggesting right now. Typically, when you get these big objectives, this will reset over the next several weeks. So one of the live streams coming up, you definitely want to bring this up again, and I'll try to cover this. I just want to flash back here for a second. Yeah, futures negative again. We're looking at only up 323. I wouldn't be surprised at all. We come in, we'll do the typical thing. We'll keep covering individual stocks, and about 5 minutes before the close, we'll go to the futures. We'll watch the close, see how these things close up. We'll see what goes on here. But, you know, NASDAQ futures continue to be down about 1%. And, you know, so there's still some positive moves out there, but they've been muted substantially off of that little algorithm run that we had on the upside. Okay, here we go. Let's go to this is a crazy stock somebody brought up, I wrote down, is APPS. This is Digital Turbine. I have no idea what they do, but they're doing something really good. Stock is actually on a weekly basis is taking out so there's potential for an RXT sell here. We went above the grid. Right now, that number is, expand this up a little bit so we can see that. RXT 3055, high 3237. So yeah, pretty amazing. Let's go to a daily and see what we can see there. Yeah, daily's getting an RXT sell as well. So watch for a minor reversal 2 to 3 days sideways on this stock. And, you know, depending on what you're positioning, you know, you could take partial profits, sell some options, do something against it. Would be probably a good strategy to consider anyway. All right. Yeah, I think we were looking at Apple. I see a comment on Apple that we were talking the potential for Apple, if it gets below 111 and change, possibly going down to 108. Yeah, it looks like futures down 3. Everything is dumping. We're coming into the last 30 minutes here. Looks like the S&P wants to go negative. Yeah. So 30 handle move off the S&P here. Nerve just got, I'm just bringing this up here, this big gap down, and we're just sideways. I don't know what these guys did, but they've got some issues. It looks like I don't see anything here. Let me go, and weekly can't look like anything now. Yeah, I'm not sure. I don't know much about this. The only thing I would point out, there's a cycle low hit on a weekly last week, and we are seeing a move up. So resistance 506, 511, best I can see. None of these numbers up here really make any sense on this one. So I know somebody asked for that a little bit ago. Yeah, here's the high yield HYG. Really just major resistance under this 200-week moving average. Just nothing there. PPMs are positive in trend mode. So a close over the 200 would be helpful there. And then there are some price objectives right now for a potential 87 to 90 move on this on the high yield. So we'll see if that comes into play or not. But it's really at a pivotal point. If we don't get that close, nothing's going to happen. Yeah, I agree with the high yield bonds. Yeah, I'll do Amazon. You know what I'm going to do next is what time is it? I'm going to run through the FAANGS here pretty quickly. But this is Vanguard Real Estate ETF. You know, I'm big on the real estate, and I haven't had a chance, but I think it was a January or December video on the channel that I did, and I was talking about how I thought that the real estate was going to be huge in 2020. I didn't know about the pandemic, and real estate, you know, it looked like the end was happening, and then we've got all of this stuff that you know, we're just seeing all this migration around the country and people moving around. So that's going to continue. But I think this is looking pretty good here. We got a 0.71, 0.68. This is weekly. What is it again? BNQ. Let's go over and just see what WaveTech's got on it. Yeah, WaveTech does not own it right now. I was just curious to see if it did, but it doesn't. So, but this is pretty close. It's the same thing as the XLF. And so if you folks are WaveTech users out there, watch for these next buy signals on an intermediate basis. That's going to tell us on XLF that there is a positive rotation going on, and that the financial institutions are going to start to really push it. And they are the single largest sector out there from that standpoint. And what you're going to, yeah, so this index on real estate and the banks should be tight. I've seen a number of comments, not a lot, but a number of comments on the channel that the banks are making it hard to lend. And my joke is only if you're not buying a house or a car. You know, you got car sales at all-time new highs. You've got housing just going crazy. So anyway, so here we go. We're doing Amazon next. All right, so Amazon, big trouble. So let's start this with the FAANGS. We're gonna start off with Amazon here. What time we got? 38. So yeah, good timing. We're below the 10-week moving average. It's negative by 0.32, so we're in an intermediate downtrend and we're heading for at least a 21. This goes in line with what I'm saying. Look at the S&P now turning negative $4 right now. This is pretty awesome, actually. And then you've got the you should move toward the 21, but the 21's rising at 1% per week. So that support line is going to rise up probably, if we look at the grid here, somewhere around, that average is 3160. Let me get the right number here. That number is 2861. So 28 S3 is probably going to be 2886, but we're definitely looking like lower prices going here, and we've definitely rolled this over. And this PPM is just that's just a shocker. So let's do Let's go to Netflix. Same thing here. Netflix is in a downtrend on an intermediate term basis. So this is a big deal. That's funny. Yes, thank you, Jason. Was that really you? Spent $5? I'm gonna have to pay him back, guys. So don't, you know. I was busy talking. I did see that though, and I thought, really? Stop it. Okay, so as we look at Netflix, you know, this thing is in a downtrend. Same story here. We're already at the 21. 69 is the number. We're printing 71. We're probably going to the 40 here. Going to continue to see downward price action. Although right now, I don't know. PPM 2 is at 0.60. So that's going to be substantial. So we're trading on major support. Maybe the best thing you can look at is trading range 469 to 493. We flip this over to a daily. We'll get a better feel for it. Yeah, so you're going to trade the grid. The grid range right now is 512 extreme, 479. Let me get to this day here. Yeah, so 483. Look at this S3, 483.18. Oh, wow. So this is why you guys want these market grid numbers. I want you to look at this. R2, 504.40, high, 504.66. Where'd we open at? We opened at 499. And then we have 483, which is S3. So we got a R2 S3 range today. That would have been a great day trade on Netflix for sure there. But yeah, so this is why you want these numbers. So make sure you register at thekendallreport.com, and we're going to get that information to you and how to get involved with that. But yeah, so PPM's just off the map here on a daily. This thing is trading on support on a weekly basis, but there's a lot of resistance. S&P now down 8 handles. Down 1.5% NASDAQ. Yeah, Christoph, I agree with you. They seem to be getting Netflix. That is, still have them, but I don't know for how much longer. Okay, so yeah, we can do XOM. We'll do that real quick. But you know what? I'm going to stay on. Yeah, XOM is trying to bottom here. Just real quick. Let's go to a weekly. See if there's anything there. Yeah, this is a tough. You know that these oil stocks are going to be hard. You know, maybe when you get all these things back involved. Let's see. We did Amazon. Let's do Softy, Microsoft. Same thing. All of these stocks, these big FAANG stocks are any of these large tech stocks are all in downtrends, minus 0.39. We are coming close to the 21 period. 199 on Microsoft is major support. So look for a trading range between 199 and probably 209. So that should at least be the setup for the next several days. Let's do Google, Alphabet. Same thing. Not in a confirmed downtrend yet, but looks like we want to head just on a weekly basis toward that 1472. We've got S1 1488, so we're going to continue to head down toward that on this stock. Let's go to we looked at Apple already, but I'll just bring it up just real quick because Apple continues to oops. Apple continues to move down to that support line that I talked about, 111.60, 112.60 is last, and we're trading 112.14. So this is definitely on major support. We got a solid PPM 1 at 1.52, and what that actually tells us is that there's less than a 20% probability, even if we penetrate it, to close under that number. So 111.60 is going to be like a magnet, whether it's above or below right now. So here's Square, just a request for that. Time we're getting to be 45. Okay, yeah, these patterns are pretty consistent, and I've talked a lot about this. We got a 1.167 on Square. If we look at this is weekly, so weekly grid is the low 138, 132 was S1, 159, so we've basically done an RXT on this one on a weekly basis. There's no Fibonacci projections, but we're still in a solid uptrend in this. So to follow this, all you need is a simple 10-day moving average, and that'll do it. And that's going to be your line to play off of. We already bounced off of that this week, but that's going to be the demand line for several weeks to go. And we got to do Facebook. We're going to do the FAANGS. Facebook is still positive. We're trading right on support 262, last 263.20. That 10-period moving average is up at 0.7, should hold here. And let's go to the daily real quick. That daily is penetrating through its STX 264.11, the low 263.09. Last trade 61.79 was the low, so we printed well below that. So Facebook is also in short-term downtrend, intermediate downtrend, but we are trading weekly support at the numbers I just mentioned. Yeah, after the announcement, we're not really seeing much change on the gold. I went through a pretty good review of the gold, and we'll update the timeline when this thing reposts so you can see that. And we've got about 12 minutes to go to the close. So we'll go back to that here in just a minute. So do I have that symbol right, Mr. AB, HII? Yeah, it looks like daily here we're starting to turn on this. Maybe move back to the 161 level. Possibly there's something here on the weekly. Not really. Got negative PPMs. You got a lot of resistance here. 162. I guess if you're trading, you might be able to trade up against that 162 number. Looking at the grid, probably locked in this grid range, 157, probably S. Looks like S1, 145, the low this week, 143.97. So that's going to be a key there. There's not anything really that I see that's tradable from that standpoint. Boy, if Buffett is selling all of his Apple, it's got to be close to a buy then. Maybe we can take advantage of Warren again. That would be awesome. Yeah, probably I'm going to do Boeing, but you know, this stock continues. I actually took it out of my Buffett strategy. I just don't, like I said before, just make a comment. You know, who needs a new airplane when there's thousands of them parked in fields around the country right now? I guess some of the new air equipment, but we're still in a downtrend weekly. Negative ppm 1, ppm 2, so you're kind of sandwiched right here. We're on support, and once you get above that 201, probably about 193 to 207 is going to be major resistance here. Mr. AB, thanks, appreciate it. All right. What time we got here? 10 minutes to go. Market stabilized a bit here. Yeah, I just brought up this Chegg stock somebody asked for. Big downtrends here, but there is some support here at the S1 number, but this stock is going nowhere. If anything, it's going to continue maybe to drift toward the 40 period moving average. Now the 40 period moving average is going up about 1.5% per week, so it's rising about $1 a week. So that number is going to go up 55, 56. So there still looks to be some downside on this thing. So we're 2 hours and 26 minutes into this stream and coming into the close here. I see you guys are enjoying so much. You're chatting about cars. I love it. So let's go ahead and let's switch over. Let's take a look at this action here. We're now at down 9. Boy, there's some weird stuff going on this platform. I'm looking at INX. Hang on. I'm looking over here down 1038, but I'm looking at my quotes over here. There's something bad going on here because $ INX on the screen is down 974. On the quote screen is down 462. So the chart is right. Down 10. Yeah, really, really strange stuff going on here on this platform today. Yeah, so this is really strange. It's showing down 850 on the quotes, and over here it's showing down 1425 on the futures. So let's go ahead. We got about 7 minutes to go. Thanks, Gino. Appreciate it, man. All right, so we'll go ahead. Oops. Nice. Yeah, we'll see what kind of sell-off we'll get. The low of the day, 75. We're 5 handles off the low. See how this thing closes up. We've got about 6 minutes to go. I'm gonna do a couple more stocks because I just want to watch the last 2 minutes. I always set you folks up. I like to watch the last 2 minutes and then before the close and last 2 minutes after, just to get a feel for what's going on. Yeah, so futures now down 18 handles. S&P since is down 14. We're printing 86. I mentioned in last night's video, it seemed somewhat maybe far-fetched that we could print down to S2 3266. It looks like we're going to come short of that, but we got to 86, which is kind of in no man's. This is weekly. Let me go to daily. There we go. So 91 was S1, S2. We're just about printing S2. And we did print, the high was 28. So we printed just between R2, S3 for the session. We got about 3.5 minutes to go, and we'll go focus in on the futures here in just a minute. But definitely pretty decent reversal day. Now, this is actually very significant. Yesterday's high, 34.19. Yesterday's low, 33.89. Today, we had a high of 28 and a low of 33.84. So this is an outside reversal that is occurring here off on a right shoulder. And so this will set up. I would tell you folks to go to the channel, watch this setup for the Apple, how to sell Apple, that, and look at those rules. So those rules we finished right here on the S&P. This is going to be, let me flip over here. Yeah, so we finished down here on the S&P. This is an outside reversal bar. You're going to be able to short the market. So you're gonna have to short the market on a higher opening tomorrow or at the open, and the high will be today's high. So hopefully get a higher opening, and you stop out over the high, and you have to go make a new low tomorrow on Thursday, and you have to close lower. So there's 2 criteria, but take a look at that video because this is a setup right now. What we're seeing in real time is a reversal day. So here we are, we're 200 points off the lows of the session. Looks like we're in the final minute of trading right now. So we'll see what kind of action we get. What I look for on the close, Okay, here we go. They're trying to print them down a little bit. What I look at on a close is a couple things. What kind of spike in numbers we get? You'll start to see it trade very erratic now. We're down into the last few seconds and we're trading 150 points off of the low of the day. So we're selling, there it goes. Look at this. We're selling right into the close. Almost made a new low on the session. Now here's the key. After this big down, to see if we see any short covering after the close. We're just about there. We're about 10 seconds. There we go. So this is the close. And we'll see if there's further liquidation or what happens here. And if we don't get a recovery, then that's not a good sign for tomorrow. And the low 73.75, and we're printing at the yeah, we'll see what kind of range. We got 2 minutes to watch, and then we'll talk about a few things and close out today's live session. I appreciate everybody that's watching, and looks like we had quite a few people live there for a while, right until TradeStation crashed, which was interesting. I had a crash in the middle of a trade one day. That was an interesting deal. Yeah, so pretty stable down here, actually. We're not getting a lot of action. This is the second minute after the close, and we're really not getting any big recovery or anything coming in. So looks like what happened is after the rally, we saw a absolute liquidation off of those highs. So if you look at where we were earlier today, the highs was 34.19. So we are 45 handles off the highs of the session. So it was a pretty good sell-off. And one of the things I talked about when the Fed was talking and we got that positive reaction, you fade that reaction. There's always a trade there. And sometimes off the announcement, that was a good fade. It also was an R3 fade as well on the market grid. Yeah, thanks, Michael. I appreciate that. Yeah, I'll go over. Yeah, so SYY, I see somebody asking for that, Mr. Tater. And yeah, we've got objectives right now on this. A couple things here. We'll take a look at. We'll do a quick analysis, then we'll close out the session here. Target range 67.84 has already been hit and exceeded, 72 to 75. But we're going to go over here and put in SYY. So let me put it on daily. Okay, yeah, so SYY's been long from 55.80 current. We got a buy signal on August 7th. Let's take a look at the trade profile, see what the projections are based on its typical holding period, what have you. So it's 27 days into the trade of an average of 37 days, 17% gain. That's projected profit. We're actually exceeding the standard deviation, but this trade would extend. This map is important, but not. I would just follow this this 3-2 trade, see where it takes you. Should be in a good position for that. Well, I'd like to know what's going on with yeah. Anyway, okay, so anyway, just to summarize today, we saw the Fed come in. We did we'll go ahead and come back on screen. We saw the Fed come in, talk the same old junk, used the same statements multiple times. They have lending powers, no spending powers. They don't want us to think that they're spending money. That would be bad. And anything they've done has been because of the Congress and the Treasury. So he's covering any of their actions there. They said they're going to increase certain asset purchases, and same line they use every time. They're going to use the full range of their tools. And I love the toolbox analogy. As soon as the crisis is over, they're going to put the tools back into the box. What I think the lending powers, not spending powers, was 3 times I mentioned there. 2 times on the full range, or might have been more. I was trying to keep account of them. So they're, and in the end, the markets weren't impressed, and they shouldn't have been. And this is why I had the thumbnail last night. Will the Fed disappoint? I think they did disappoint, but there wasn't much they could do to actually to give any big advantage to anything, right? They've already done the alphabet soup, A through Z. They bought all the assets. Like I said, without fiscal stimulus, we can't go anywhere. And with the politics that are going on right now, the them against us kind of syndrome that goes on, it's not about, it doesn't appear to be about the people. I know there's a lot of folks that are unemployed. They can't get back. Their state, California folks I know are really struggling out there. And, the whole hospitality, all that stuff. So we've got to get these states back open. And on top of everything in California, the damn place is burning down, right? So we get it. But anyway, yeah, I'm sorry, Tan, you didn't get filled on those puts. I had an interesting story about getting filled. I've always been market order king, market in, market out. And that came from my very first manager when I started in the business way back in 1979. And we earned commissions off customers putting orders in those days. And he used to say, limit orders, limit business. And I always took that as to say, if you want in, put a market order in. If a bid ask or spread makes a difference, watch the screen when you see the trade, put it in, do market. If that little spread, and you're worried about that little spread not getting your exact price, then you probably have the wrong price, or you have the wrong trade, because that should not matter. The spread or a little bit of fill shouldn't affect what's going to happen in a nanosecond or a minute or two, should not affect the ultimate outcome of a trade decision to put it on. So one of these days we'll actually talk about, we'll talk about trade setups and some other things. And for now, that's why we put the WaveTech tool out there and all of that. So we'll just go here, and I believe you can still hear me talk, and we'll just finish off here. And I really appreciate everybody showing up. We had a lot of watchers today. It was good. I think we were right at 1,000 until Trade Station crashed. So anyway, really want to thank everybody. I really appreciate it. Another video tonight and one more tomorrow. And as always, if the wheels come off, I'll light the screen up. All right, folks. Thanks for watching. Appreciate it.